Awesome. Good morning, everyone. Thanks so much for joining this session. Appreciate you all coming along. The aim of today is to go through the Research Development Tax Incentive and just to go through this federal government program. It's a specialised area of tax, so not many people know about it. So the aim is to provide as much information as possible. We have a Q&A session at the end, but please, feel free to ask questions as we go along. This is supposed to be as interactive as possible. So what we'll be going through today, the agenda, I'll tell you a bit about BridgePoint Group, what it is that we do. We'll go through the R&D tax incentive, how it works, some details, how it applies to your clients, and also we'll briefly touch on what other government grants and incentives are available as well. So without further ado, let's get started. So about BridgePoint Group, so I've been working in the R&D tax incentive space, for over 12 years. We've helped companies, both large and small, secure millions of dollars in tax offsets and cash refunds. It is a very, underrepresented area of tax, and it doesn't get leveraged enough, in my opinion. So what is the R&D tax incentive? So as I said before, it's a federal government initiative. It's actually been around since the mid-1980s. It was written in 85 and enacted in 1986. Since then, it's only gone through one major overhaul, and that was in July of 2011, where it changed from the R&D tax concession to the R&D tax incentive, just to keep up with the times and the shifts in technology, in particular around how software R&D was categorized. But the underlying aim remained the same. It was to help foster Australian innovation. So our R&D tax incentive program here is based on, similar R&D tax incentive programs amongst other OECD countries. The one glaring statistic about the R&D tax incentive program here in Australia is that 70% of eligible businesses do not actually claim the R&D tax incentive. A recent survey that was done by Oz Industry found that companies either just didn't know about it or they knew about it and just put it in the too hard basket and just couldn't be bothered claiming for it. To give you a bit of an idea, every year there's approximately between 12 to 14,000 R&D claimants, which may sound like a large number, but when you think about how many companies there are in Australia and how many companies are doing R&D, it's actually a relatively small figure. So let me just go through quickly the R&D tax incentive and how it actually works, just to give you a bit of an idea. So the R&D tax incentive, if you look down, there's two government bodies that administer it. The first is Oz Industry, and the other is the Australian Taxation Office, the ATO. So the way it works is within 10 months of financial year end, so 30 June year end, have until 30 April, to lodge an application form. And in this application form, you detail to Oz Industry, hey, this is the R&D activities that I'm conducting. Here's how it ticks the criteria of the R&D tax incentive legislation. And here's the experiments that I've been doing. Oz Industry reviews this application form and they provide what's called a registration number. And this registration number is quite important because when the company lodges its tax return and includes within it the R&D schedule, which details, the salary costs, contractor costs, direct expenditure, overheads, etc. At the top of that R&D schedule, you include that registration number that Oz Industry provided you. So that way the ATO knows that when they're processing the tax return, that, hey, the numbers included here relates to activities that have been lodged with Oz Industry as per the registration number. And then the tax return gets processed. To answer a couple of questions we got beforehand in the lead up to this, we got a question about the application form. How long does it take to process a registration number? The service standard is generally, 10 business days. So once you lodge an application form, you get a registration number back normally within 10 days. Another question which we got, and I'll dive into the answer to that right now, is what constitutes eligible R&D? So R&D in the context of tax law is considered the generation of new knowledge by way of a new or improved product, process, or service. So it's deliberately written broad enough where it can apply to many different industries. So we've got claimants, software, tech, engineering, manufacturing, life sciences, any industry, as long as you're doing the activities in Australia and you're generating this new knowledge by way of a new or improved product, process, or service, you can definitely have a look at applying for the R&D tax incentive. The other question we got at the outset, and I'll address that now, is on the costing side of things. So a lot of people ask, what costs can I include as part of an R&D claim? Well, the main buckets are salary expenditure of people who were helping work on the R&D activities. So salary expenditure in this context actually refers to salary plus superannuation, plus workers' comp, plus payroll tax. So these on-costs are all eligible as well. You can include contractor payments. So if you contract a part of your R&D to an external third party in Australia, you can include the contract payments as well. Any direct costs and materials, etc., that you purchased in order to conduct the R&D. Depreciation of assets used for conducting R&D, you can include as well. For manufacturing clients, you can even include feedstock. So feedstock, which is dumped, could potentially be a large part of someone's R&D claim. And also owners of the business, when they draw a salary, you can include their associate expenditure as well as part of the R&D claim. Also, what many people don't realize is that even overheads, for example, rent, electricity, telephone, internet, etc., we can even include a portion of that in your R&D expenditure calculation. So looking at all these various categories of expenditure, an R&D plan for someone can actually start building up quite quickly once you start going through and analysing the detailed GL and figuring out, right, what costs can I pick up, what costs can I not pick up. The actual work that I do in the R&D claim process kind of happens below all this. It's preparing the project description, which is essentially a technical write-up of all the activities. It's a rather time-consuming and nuanced piece of work because in the project description, you have to essentially understand what it is the client is doing, how it applies to the industry from a global perspective, and articulating what the new knowledge generation is in both the way that the client is happy with, Oz industry is happy with, and that satisfies the legislative criteria as well. And then on the flip side with the costing, we prepare a detailed costing workbook where we go through literally the detailed general ledger line by line and figure out, right, what is eligible, what is not eligible. And the project description, the R&D costing workbook, essentially form the foundation of a successful claim. And that's the process in which it works. So let's go through it. So what is the actual point of claiming the R&D tax incentive? What are the benefits that people get? Well, companies for FY21, so there's two tiers to the R&D tax incentive based on the turnover of the company. So companies with less than $20 million worth of aggregated turnover get a 43.5% refundable tax offset. Companies with greater than 20 million turnover get 38.5% non-refundable tax offset. The reason it's refundable for SMEs is to help companies with those that are in a loss-making position or pre-revenue to get that cash refund to be able to invest it in R&D. So one of the questions we've got before the seminar started was, can I claim R&D if I'm in losses or in pre-revenue? The answer is, most definitely yes. It's actually quite advantageous because if you're in pre-revenue or if you've got tax losses, you can get a 43.5% cash refund. So if you spend 100K on R&D, the company will actually get 43.5K back as a direct debit into their account. For companies with greater than 20 million turnover, the benefit is slightly less and it's also non-refundable. So if that same company was greater than 20 million turnover and they spent 100K on R&D, you got 38.5K of an offset to help pay any tax owed to the ATO. If there's no more tax owed, then that 38.5K gets carried forward to future financial years, much like carried forward tax losses do. The system has changed a little bit for income years starting 1 July 2021 onward. The benefit to companies with less than 20 mil turnover remains the same. It's a 43.5% refundable tax offset. For the larger end of town, though, what they've done is they've put an R&D intensity test in. So essentially what they're saying is that if at least 2% of your total expenses relates to eligible R&D expenditure, then your benefit, instead of being your company tax rate plus 8.5%, becomes your 30% company tax rate plus 16.5%. So it can be quite advantageous because, you know, if a company's got a corporate tax rate of 30%, all of a sudden their non-refundable rate jumps from 38.5% to 46.5%, just depending on the R&D intensity. So it could have quite a significant impact for the larger end of town. The reason they put these rules in was because the larger end of town was saying, well, SMEs are getting a 43.5% refundable tax offset. We want our offset to be, you know, somewhat similar percentage-wise. Yeah. However, we understand that you don't want to give a cash refund to large corporations. At least give us a similar percentage, but make it non-refundable based on us continuing to invest in R&D and the flow-on effects this R&D has. So, you know, that feedback was listened to, and from 1 July 2021 onwards, these are the new rules we have. So how does it apply, you know, to your client base? Basically, it's for any Australian company, and it's got to be a company, it's got a PTY, LTD, or an LTD, and you've got to be designing a new or improved product, process, or service. It really is that broad, and it's intentionally written in such a way so that it can apply to many different industries. You know, you'll be surprised how often we chat to companies and they say to us, hey, why haven't I heard about this beforehand? Why hasn't my bookkeeper or someone told me about this? I've been doing this R&D for 4 or 5 years. You know, can I go back and claim? Unfortunately, you can't. You know, you can only go back 1 financial year. You can't go back multiple financial years. And it really is designed to help companies in Australia innovate and come up with these new ideas, because there's a lot of positive flow-on effects that occur to the broader Australian economy as a result of having this R&D tax incentive program in place. So really, if you've got companies on your books and they're developing something new or improved, thinking outside the box, or developing something which is significantly different to what is currently available in the industry, unbeknownst to them, they might actually be conducting eligible R&D activities, and there's, you know, government grant money on the table, government cash on the table, which they're just not taking advantage of. You know, and this could be as substantial as a reduction in your tax bill to effectively nil, or could be even greater. They could be eligible for a cash refund, and getting that cash refund in the door and getting the cash processed through their P&L, it leads to a quite substantial benefit long term. That's kind of the R&D tax incentive part. You know, if there's any questions, guys, feel free to jump in and discuss the R&D TI. There's other help that's also available to companies, and I'll kind of touch on that quickly. There's what's called an early stage innovation company. Apply. There's an early stage innovation company tax program where basically a company can be registered as an ESIC, and then as a result of being registered as an ESIC, whoever invests in the ESIC gets 2 key tax benefits. The first being a 20% offset on their investment, as well as whatever shares they've purchased get what's called modified capital gains tax treatment, whereby there's no CGT payable if the shares are held for more than 12 months. There's also an export market development grant. The EMDG is geared towards companies and helping them promote eligible their products for export. So if a company's got overseas representatives, marketing consultants, they travel for marketing visits, they attend trade fairs, seminars, have IP related costs for their for their works that they've got to file offshore, then the EMDG is definitely a program for them. This one gives up to 50% of eligible export promotion activities back by way of grant funding. There's also the Accelerating Commercialisation Grant. The AC grant provides dollar-for-dollar funding up to $1 million. And this is for helping companies essentially license and promote various IP and technology, both domestically and globally. And there's also other government grants which kind of pop up from time to time. So, for example, I've helped companies with a manufacturing modernisation grant recently, where they're purchasing new equipment to modernise their manufacturing line. There's grants for regional areas of Australia. I helped a client recently, get catalysing artificial intelligence in the regions. So there's other government grants which kind of pop up, but the main ones that we deal with is the R&D tax incentive, the ESIC, EMDG, and accelerating commercialisation. I can see a couple of questions that have kind of come in, so I'll address those here. So someone asked about a trust with a corporate trustee. The corporate trustee can claim the R&D. A trust, however, cannot. There's a question about, will the AC grant subject to the R&D 10% clawback? Yes, if the AC grant funding is used on eligible R&D activities, then there is a clawback for that. You just got to look at the detail of what the AC grant funding arrangement is, but they're quite prescriptive in terms of this is what you've got to use the AC grant funding for. Generally speaking, what I found is that by the time you get to an accelerating commercialisation grant, you've got a product that's ready to be commercialised, and normally your R&D is already winding down anyway. So the AC grant funding is normally used for commercialising what the original R&D activities were. So there's generally not too much of a crossover, and therefore not a whole lot of clawback potential there. There's potentially clawback potential when it comes to, for example, the New South Wales MVP grant, where that one is specifically designed to help people design their products. Another question which isn't registered just yet, but we got before this started, was around documentation. So what do I have to have in order to prove the R&D activities? So I'll go back a couple of slides and I'll just... So the R&D tax incentive being administered by both Oz Industry and the ATO, you basically have to substantiate the activities conducted in case you ever get reviewed by Oz Industry. And you also have to substantiate any of the expenses incurred in case you get audited by the ATO. Also, you need to be able to prove the link between the costs incurred and the activities conducted. So, for example, from the Oz Industry side of things, there's no set formula in terms of they say these are the documents you need, but it could vary from anywhere from email correspondence, proving that these people are involved in the R&D and these are the back and forth they had via email saying this worked, this didn't work, to things as formal as business case documents, progress reports, test reports, anything which really shows that the R&D activities took place during a certain period. From an ATO perspective, it depends on the types of costs that are being claimed. So, for example, contractor expenditure, what you'll need is, the contractor invoices, which have a description of the work that was done by the contractor on the company's behalf. That would, be able to illustrate the R&D activities that were done by the company. For people's time, it really ranges from anything from timesheets to job descriptions, meeting minutes, calendar entries, anything which you can use to point to say that, hey, this is how much time someone spent on R&D activities. So it really does vary depending on the type of costing category. And the substantiating documentation is not something which is provided to Oz Industry or the ATO when you lodge your claim. It's just something that we keep on file in case your claim ever gets reviewed. So when we do claims for clients, what we do is that we work very closely with the accounting firms that, for example, refer to us, and we say, hey, here's all the R&D documentation that provided us. This is what you can use in case of a review, and this is what you need to submit. So we have a good relationship with a handful of accounting firms already, and we work quite closely with them to make sure that their R&D claims are as robust as possible. In saying all this, we don't take on every R&D claim that gets referred to us. We vet out all the clients in order to determine their eligibility, because the last thing you want is to be lodging R&D claims which are borderline, and Oz Industry or the ATO take a very different view on whether it constitutes R&D or not. Another question we got beforehand was, how does the relationship work with BridgePoint and other accounting firms? Because, obviously BridgePoint has its own accounting and tax function. Basically, to put it quite simply, we never bite the hand that feeds us. It would be quite silly to do the R&D work and help and then try to take any other work. We just, A, it's immoral, and B, it doesn't make any sense, because then people will stop working with you pretty quickly. However, what we do is we have a very open line of discussion between the client and the accountants, and just make sure everyone's copied in, so everyone knows, where R&D claims are at, what stage of the process they're at, how much progress we've made. And on the flip side, we've also found that clients are very appreciative of their accountants once they start referring work through, because, being a specialty area, not many accountants know about this. And then it unlocks all this potential grant funding opportunity and tax offset payments, which otherwise they weren't getting in recent years, and the clients feel looked after. So, to cut a long story short, we never try to cut anyone's grass. There's plenty of other work to go around as it is, and we do our best to build trusting relationships with other accounting firms, so we can at least help out with this one specialty area of tax, which, to be quite frankly, not a lot of accounting firms have the in-house capability to do. So we've got a question here about R&D assets that lease to overseas business partners for conducting and collecting R&D sampling data. Would it be claimable? Generally speaking, the answer to this is normally no, because the R&D activities are occurring offshore. However, when you're referring to collecting R&D sampling data, there's a part of the R&D tax incentive which is separate to the annual registration process, and this is called an overseas finding. And I'll go through this quickly. Basically, an overseas finding is a separate process which a company needs to lodge prior to the end of the financial year. And it basically says to us in industry that, hey, we cannot conduct a portion of these R&D activities onshore due to various reasons. So, for example, a biotech might say that, hey, there's insufficient sample size of a target population, so therefore we cannot conduct a portion of the phases clinical study here. Or there's no specialty within Australia. We've had a look, and there's no contract research organisation that can conduct this part of a clinical trial here, for example. In this instance, a company can lodge an overseas finding with Oz Industry and provide all this information as to why this portion of the R&D activities cannot be done. If Oz Industry accepts this, then the offshore activities, which couldn't be done in Australia, those activities can be included, and the associated costs can be included as well, provided that these certain conditions are met. So in this instance, where R&D assets that are leased to overseas business partners for conducting and collecting R&D sampling data, the short answer is no. However, the longer answer is, if they have an overseas finding in place, then potentially the R&D sampling data, if it's covered by that overseas finding, could potentially be included as well as part of the R&D claim, and it attracts the same rate of offset. While we're on this as well, and we're talking about activities, a common question I get is, you're designing and developing R&D, or you're designing and developing something new. What else can I claim? Well, you can claim the design, development, testing. These are called your core R&D activities. but there's also supporting R&D activities. So there's all the activities you've got to do to ensure that the core R&D activity can take place. For example, project management, background research, literature reviews, etc. So you can include supporting activities as well as core R&D activities, and both core and supporting activities attract the same rate of R&D offset. So normally what you might find is a company will have, a couple of engineers, whatever, doing the R&D, the core R&D, and then they'll have the CFO, financial controller, whoever it may be, assisting with the supporting R&D activity, the head of ops, helping the project management part of things, making sure it all runs smoothly. So before you know it, between both core and supporting activities, you're going to have a handful of people involved in various capacities undertaking the R&D project or past the R&D project. So someone asked me, what industries do I cover in general? I work across a whole range of industries. So I've got biotechs, engineering firms, software and technology clients, manufacturing. The ones that probably interest me the most, the biotechs are, of course, really interesting because of the cutting edge R&D they're coming up with. It's quite breathtaking, some of the advancements in R&D in the biotech space. But in saying this, being in New South Wales, there's a big focus on software and technology. So there's always, companies doing some sort of software or technological work, which would fall under the R&D tax incentive, which we can help them out with. But if I had to, break it up, I reckon probably our client base based on industries is probably software, tech, manufacturing, and maybe life sciences. But in saying this, I've helped companies anywhere from, winemakers to engineering firms to people coming up with novel therapeutics. I've seen the entire gambit. So someone asked a question. There's an Australian company that project manages the development of an app with developers residing overseas. Can they claim R&D? It depends on if any of the R&D is being done here onshore. If literally all that's being done is just project management onshore, then you can't claim the R&D activity. You can't claim the R&D tax incentive for this because there's no core R&D activity actually taking place in Australia. There's only developers residing overseas conducting the R&D there. However, just say, for example, you've got that Australian company, they're project managing the R&D here in Australia, and you have some development staff in Australia and some development staff overseas, then you can only pick up the Australian development staff. You can't pick up the overseas component. I've heard many people come up to me and say, oh, but what if your overseas developers, issue the company with invoice and the invoice says it's from an Australian company? How will anyone ever know that the R&D activities are being done offshore? The answer to that is, the onus is always on the person claiming to prove where the R&D activities are done. And if you know the R&D activities are actually being done offshore, then there's no point pushing the envelope. Just don't claim the offshore costs and focus on what you can claim onshore. This scenario happens a lot in the software industry where people, before they start undertaking the development of an app, say, use the R&D tax incentive to factor in what the actual cost benefit of developing onshore versus offshore is. And in my experience, what I found is that once they realize that they can get a 43.5% refundable tax offset and they're in a pre-revenue position, a lot of companies opt for the Australian development option for two reasons. One, they find it easier visiting someone's offices and going through the development work. They find that rapid communication stuff a lot easier as opposed to having to send an email to someone offshore and never actually seeing them. And also it ends up being not too much more expensive once you factor in the refundable tax offset component as well. So I have helped a handful of software developers with some sort of cost benefit analysis prior to undertaking projects. They can figure out what the true cost is of undertaking an app build in Australia versus overseas. Yeah, so I'll answer another question that we kind of had, which we get a lot of people ask, is that how often can I claim the R&D tax incentive? So a company can claim an R&D tax incentive as often as they like for as long as a project goes on for. What we find in general is that a project normally goes on for between 4 to 5 years, and then a new project would generally take over. So a company can consistently be claiming the R&D tax incentive. The one thing to note about the R&D tax incentive is that you need to lodge an application form with AusIndustry every year, and you have within 10 months of the end of the financial year to do it. So April is normally a very busy time for us because 30 June year ends have until 30 April in order to lodge their R&D application forms. If they don't lodge by 30 April, then they forego any R&D tax offsets available for the financial year that ended 30 June 2021. Unfortunately, AusIndustry does not provide any extensions or anything like that. They've stopped doing that. They gave one extension for COVID last time, but they've given the indication that there's going to be no extension. So it's a drop dead deadline. If you don't get the application form lodged by 30 April, then you forego the R&D tax offset for 30 June 2021, and tough luck, you've got to try again next year. So I said AusIndustry and the ATO have different views on what is R&D expenditure. So just to be clear, AusIndustry only reviews the activities. They're not necessarily concerned about the expenditure. The ATO reviews, or they could potentially audit, the R&D expenditure calculation. So Australia's R&D tax incentive program is unique in that the two government bodies are very disparate, and they only review the two separate areas of they specialize in reviewing the two separate areas of the R&D tax incentive. So AusIndustry doesn't ask any questions about the R&D costs, and the ATO never asks questions about the R&D activities. They very much stay in their lane. What we found is that both government bodies are very, I guess, collaborative. They're very open to the discussion, and they just, a lot of the time, just want to understand the methodology as to how either you determined that an R&D project was available or the methodology in which you calculate your R&D expenditure. And we find that with this collaborative approach, it's quite beneficial, and you can get a very good outcome if the claim was to ever get reviewed or spot checked. A question that not necessarily accounting firms ask us, but a lot of clients have asked us. So in case you guys are wondering, is that on average, what's the offset that you get for clients? It's a very tough one because, you know, it very much depends on the size of the client and the quantum to spend. But I would estimate that on average, we get about 250K worth of tax offsets per financial year for a client, I think R&D. So that's not necessarily 250K in a cash refund, but 250K which first gets used to pay any tax owing, and then the remainder cashed out as a refund. So a lot of companies kind of try figuring out, you know, what is the potential benefit if I go through all this effort? To which, you know, I say, this is on average what the offset is. And the other response that I give them is, well, you know, when we work with you guys, we limit, you know, your company's time involvement to 60 to 90 minutes. And we do all the heavy lifting on your behalf. We prepare and lodge everything because it's actually, it's more convenient for us. We never have to rewrite anything. We just prepare everything based on what the client advises and the documentation they have, and prepare everything ready for lodgement. And also it saves their time. So they're more focused on their core business. I'm just mindful for time, guys. If there's no other questions, we might just wrap it up here. And then if anyone thinks of any other questions, please feel free to give me a call on my mobile number. Also, please feel free to drop me an email. I'll be more than happy to chat. and discuss, any potential R&D claimants you guys might have or whatever else. And just be mindful that, the lodgement deadline for 30 June 2021 is 30 April. So it's only a couple of weeks away. So if you do have anyone which you think might be able to claim, it might be worthwhile contacting them sooner rather than later. So we've got a question here. We have a client with the same R&D project. We're talking about 25K per year. We're hoping to work through it slowly ourselves to help the client. Do you think this is reasonable and won't be too hard? To answer that question, it kind of depends how much experience you have in preparing an R&D claim. Generally speaking, regardless of the level of expenditure, your application form and the technical write-up needs to be on point. Because regardless of the quantum of how much your claim size is, Oz Industry doesn't care. If it's not written well enough, they will pull it apart and they will want to review it. So yeah, the answer is potentially it might not be too hard, just depending how much experience you have. Okay, if you have no experience, then you might be battling, and then you might be struggling, and it could end up costing you more time if your claim does get reviewed by Oz Industry. So yeah. Alrighty, guys. We might just leave it here. I want to thank AccSource, in particular, Bubalan and Namal. Thank you guys so much for helping organise this session. This has been recorded, so it will be shared with everyone along with the slide deck. And please, don't be a stranger. Please feel free to give me a call on my mobile, send me an email. There's no such thing as a stupid question, so please don't be afraid to get in touch. I'd be more than happy to answer any questions you might have later on, or you might think of later on during the day. Also, just to let you know, with potential clients, we have, an obligation-free and free, half an hour session with them just to scope out whether there is any eligible R&D. And generally speaking, by the end of that chat, we can figure out pretty quickly whether they should or shouldn't go down the path of lodging an R&D claim. And we provide that as a free service just to let companies know that either A, you should, or B, you shouldn't claim. But yeah. So ladies and gentlemen, thank you all so much for jumping on this webinar. I'll let you all go, and thank you so much for your questions, time and attentiveness. I appreciate it. Thank you all. Have a great day.